All right, welcome back to How to Invest in Commercial Real Estate. We are back again talking about some different investment options that some people may have in this crazy market. But before we get to that, we want to talk about a cool deal that's breaking ground this week. Joel, tell us a little more.
Yeah, just got out of a meeting. It's Iconik Bixby. It's mixed-use, multifamily retail development going to downtown. And
Downtown Bixby,
despite interest rates going up and increasing our costs, we're moving ahead. We're gonna do it anyway.
How many square feet is that thing?
How many square feet? I don't know.
It's huge.
But it's like 135 units, and it's got retail along the bottom. It's got 2 or 3 levels of parking.
So the building itself is three stories?
Yeah, 3 stories.
Yeah, we'll put some pictures up so they can see it.
Yeah, Iconik Bixby. Check it out. We're breaking ground. I think it's next week. It'll be about an 18-month build.
This release next week. That's why I said this week. So way to mess that up.
Yeah, well.
But it's this week. It's being broken ground this week.
All right, this week. And so drive by. It's 151st and Memorial.
Yeah, I think one of the coolest things about this is the kind of public-private partnership, right? Like that's the first time the three of us have done anything like that. So you're actually partnering up with the city of Bixby, I apologize, and they maybe gave you a piece of land and some sort of incentive. So real quick, how does that work and why would they do that?
Yeah, so they put out an RFP or a request for a proposal, and there was only 2 or 3 of us that bid, and we won the bid, and then they've developed a tax incentive district, TIF district, and so then they're offering us TIF dollars based on the value and economic impact of the project that we're doing. And then as far as the free land goes, it's really not free land. It's once we spend an equivalent amount to the value of the land in infrastructure improvements, that's when they deed the land to us. So we actually don't own the land yet, but as we start spending money on infrastructure at the site, as soon as we get to a certain number that equals the value of the land, that's when they deed it over to us. So
yeah, and they're able to do this because you're going to go in and generate sales tax, and they're going to recoup that investment, so to speak. So that's really how cities invest in commercial real estate.
Yeah, and I believe Broken Arrow's done it as well. Not only will the retail provide sales tax, but just getting 130 residents, or it's not going to be 130, maybe it's 2 or 3 people per apartment, maybe it's 250 people in downtown living and spending their money in downtown Bixby. That's really that was the pitch that we gave them. Is guys, the downtown is dead, or it's nobody lives there. Everybody just drives by it. They're driving north to on the Memorial to spend their money. Right. They may be driving west on 151st to go spend their money in Tulsa Hills. So it's like we got to get people living here and spending here.
Yeah. So real quick, what's the project timeline and estimated cost right now?
Okay, it's roughly $30 to $35 million. We're finalizing budget, and timeline's about 18 months. So the spring of 2024, we'll be trying to fill that deal up.
Hopefully.
All right. Will Bixby be on the lookout? Spring of 2024.
Yeah.
Summer of 2024. Yeah. Anyway. We'll go ahead and kick it off here. So I thought it'd be an interesting time. Obviously, it's a super volatile market right now. The stocks are going down crazy. Debt is going up crazy. Real estate is kind of stagnating a little bit. There's some delta in between the Federal Reserve and the Treasury bills, and we'll kind of get into why that may be not as correlated as it is. But let's just start in the stock market, because I think that's where most people have their investments, right? Their company 401k, their Robinhood account. It's kind of the first point for a lot of people to invest is the stock market, right?
Yeah, right. Like I said, everything's going down, right? So I've got some numbers here. Let's see, the Dow and S&P 500 at the end of Q3 closed at their lowest since November 2020. So basically, in 2 years, you've made nothing on any of your stocks, right?
This year, just year to date, they're down, 25% on the Dow?
Well, the Dow's down a little over 21%. The S&P 500 is down a little bit over 25%. And the NASDAQ is down more than 33%.
33% just this year?
Just this year.
And I am not an economist, and I'm definitely not an expert on the stock market. But write me down. I'm making a prediction. We're not to the bottom of this cycle yet.
I don't think so either.
And I have a feeling that it could get a lot worse before it gets better.
Yeah, it could. A lot of times, in my experience, what happens in the stock market is as soon as you get some bad news, it just starts plummeting. But then it tries to, a lot of people try to time it so that, okay, I'm going to start buying before it goes back up. And so sometimes it will plummet, and then it will actually start going up before things start getting a little bit better, because the experts are trying to value in what they think is the drop's going to be quickly, right? And then start rebuying.
I think the biggest thing is, and we've talked about it before in the show, is like, I think less than a third of the stocks on the New York Stock Exchange pay a dividend. And I think that average dividend is like 3 to 4%.
Yeah, maybe.
So you're not getting,
maybe less.
Most people aren't even getting dividends. They didn't even know that,
Right.
that was a thing out of the stock market. So really, you're just seeing all of this money being lost, and you're not getting anything in return. You don't see yourself paying down any debt. You don't see any cash flow. It's really just a bad day.
You just have to sit on it and hope it goes back up. That's all you can do.
So with real estate is interesting because specifically, we're not selling our real estate right now, right? Like, we don't have to sell our real estate right now. And I know you could make a similar point for stocks, and we'll circle up with that in a second. But right now, our dividend has stayed the same in the real estate business, right? We're being paid to hold it, and we don't have to sell it right now. So our value hasn't decreased at all. So theoretically, our real estate's fine. If anything, it's doing better because it's appreciating still. The rents are still going up with lease renewals and already contracted rents that are scheduled to go up, and our debt's going down. So we're making money right now.
Yeah.
And the stock market's losing money right now.
Yeah. And what happens in the stock market, at least for a lot of people, is it starts going down and they panic and they sell it at a loss maybe, or not as much as they could. And then it starts going back up and they're like, oh, well, I missed the upswing.
Happens every day.
Oh, it happens every day. It's happened to me many times, actually. And with what I like about real estate is you have to be disciplined with real estate. You really can't sell it.
It's illiquid.
You could.
Yeah.
It's illiquid.
Now,
So,
I will add, though, that we are selling some properties right now, and I'm definitely not selling them at a discount.
yeah, sure.
There's so much money out there chasing property, and real estate is such a solid investment that I'm still seeing real estate values maintain and or go up because of the inflationary situation that we're in. Where you may say, well, I know, but houses in my neighborhood aren't selling for as much. Yes, personal homes based on the mortgage payment that's based on the interest rate and people's incomes, yet those are going to get depressed.
Consumer spending stops.
Yeah, when we're going to go into a small recession, most likely next year, that may put more downward pressure on single family homes.
Yeah.
But as far as commercial real estate goes, I think the demand is high and the amount of capital chasing it is high. So I don't think we're going to see, even if you wanted to sell your real estate, much of a drop in value there.
Yeah. When I say you can't sell it, I shouldn't say you can't. You can sell but it takes a lot longer. When if you panic in the stock market, you push a button and it's sold.
Right.
Or you push a button and it's not quite that easy in real estate is, I guess, my point.
Yeah, and going back to some of the sales, right? Like, multifamily is still an incredibly hot asset class. I would say large institutional industrial is still a massively hot asset class. We haven't seen any price reductions on our Kitty Academy sales. We're about to close on one and then about to list another 2, and those are still being sold at better prices than we underwrote. And I'd like to get into that a little more. So the Kitty Academy specifically, why do you think we're not seeing a drop off in prices given the increase in debt on those Kitty Academies?
Well, for me, it's either because they're small enough for all cash buyers who may not care, or maybe they want to get some debt later, refinance later, or it's 1031 money. Again, that'd be all cash, but it's 1031 money, and they've got to do something. So I think
that's the majority of it. I think we've had such a run. Real estate, you could probably say real estate's on a multi-100-year run. Okay. But let's just say from 2008 till now, it's on a 14-year run. And the amount of gain people are getting when they sell is so high that they can't take a 25% hit or more on the total value there.
Right.
And so they're motivated to go ahead and buy the next piece of real estate. And yes, maybe they have to pay all cash, but still, that all cash is it's almost guaranteed 6%, 7%, depending on the cap rate. Right. And in an inflationary environment, that's going to go up. Right. The value of that real estate is going to go up in addition to the cash flow that it provides. Yeah. And so I think that's what's going to continue to prop up values on commercial real estate. Well, real quick, what about the stock owner that says, well, you're not going to sell your real estate. I'm not going to sell my stocks. I'm going to hold. You're right. You can hold your stocks. But they're not paying you. They're not paying you. Our real estate is paying us, and our investors are getting paid to the tune of 10 to 12% a year in cash flow alone. And then when you add in the fact that we're paying down those loans and our properties going up in value because the rents are going up, it really is a strong case for real estate over stocks. Yeah. I'm not saying don't have stocks as part of your portfolio, but you can't spend stocks. And our investors can spend the cash that we send them every quarter. Yeah. And that's the difference. And they're still getting all the benefits of the real estate investment. Just like if you were holding stock, you're getting the benefit long term if it goes up. But we're paying 10, 12% in cash in their pocket.
Which is way more than if you have a portfolio of stocks. Maybe some of them are dividend paying and they're paying it 2 or 3%. So your overall portfolio might be paying, I don't know, 0.5% per quarter or something compared to our 2 or 3% per quarter. So
yeah, and I mean, we're all complaining about the interest rates being high, but realistically, they should be higher. Like the prime is way higher than the treasuries right now. I mean, and I'm not a massive bond guy, but at 4.25% for a 5-year treasury, I mean, that's looking pretty appetizing. That gets up to 6%.
Bonds are actually getting more popular right now because they're over 4%, like you said, and a U.S. Treasury. It's taxed at the federal level, but it's tax free at state and local level. So those are attractive if you wanted to do that in the short term.
And I think going back to the kitty cabins, I think what's artificially propping up the market right now is that, the treasuries are getting a little higher, 4.25%. But if you can still go buy a 6.5 cap kitty academy in cash or a 6 cap kitty academy in cash, now you've essentially got a 6-year kitty academy bond, right? Yeah, I mean, that's kind of the same thing. Or a 6 cap Walgreens. You have a 6% bond on Walgreens stock, essentially, or on Walgreens company. So, I mean, those are
rent increases too. So that's going to go up every year, the return.
Plus, if debt goes down, you have the possibility to refi. I wouldn't necessarily just pencil that in if that's what makes it work, refining in 2 years down to 4. I wouldn't necessarily do that. Yeah. But still, a 6 cap deal buying in cash, that's a decent return. And I think that's what's keeping up a lot of these single tenant deals. That and, just the institutional stuff. There's just still so much money out there, man. I think that's a good comparison between the stocks, the bonds, real estate. Obviously, we love real estate. Obviously, a lot of our investors right now specifically are loving real estate because everyone's seeing the stock market drop. Everyone's seeing their Ameritrade account or their Robinhood account or whatever brokerage they're in. Everyone's seeing that go down. Most people aren't getting paid the dividend, but yet our investors, they really start to believe after that first or second deal, that second year of distribution maybe, or when the market starts to get a little volatile, they're like, you guys still sending out checks this quarter? It's like, yeah, man, of course.
I can tell you personally, I got 3 checks today. I got a couple yesterday, and it's making me feel a whole lot better about my overall financial situation after watching the stocks go down for months.
Yeah, it's not going to stop, guys. The next year's stock market is probably going to go down. I could see it going down another 20, 30%.
Could be.
I feel like we had such a run in the stock market, and it's so volatile based on people's opinion of the overall market. They're raising rates for a reason. They're trying to create a recession or something like that to get inflation under control. And so at some point, the dam will break, and we'll get some capitulation, and we'll have a massive drop. And I guarantee you, after that, we'll still send out $1 million in distributions between the two companies
every quarter.
Every quarter.
Yeah.
Well. Obviously, we're a little partial. We love real estate. Get involved. If you need help, go to our website. It's thecriterionfund.com. You can join our investor list. And other than that, I think we'll catch you next week.
All right.
Thanks, guys.
Thanks.